And Europe's economy is taking a fresh hit from the Iran war. Rising oil prices, fears over disruption in the Strait of Hormuz, and another energy shock are now slowing growth across the Eurozone. From Germany's industrial slowdown to France's flatlining economy and Italy's recession fears, governments across Europe are now scrambling to protect businesses and consumers from soaring costs. The biggest concern for Europe right now is energy. The Strait of Hormuz, which is one of the world's most critical oil shipping routes, it remains under pressure because of the Iran conflict. Nearly one-fifth of global oil flows through the route, and fears of supply disruption, they have pushed crude prices above $100 a barrel. That spike is now feeding directly into inflation, fuel bills, transport costs and factory expenses across Europe. Germany, which is Europe's largest economy, is among the worst affected. Berlin now expects a massive €52 billion, that is $61.2 billion shortfall in tax revenues, through 2030 because of weaker economic activity linked to the war. Germany's 2026 growth forecast has been slashed to just around 0.5%, nearly half the earlier projections. Energy-intensive industries like chemicals, steel and automobiles are facing severe pressure as electricity and fuel costs rise again. The government is now considering fuel tax cuts and higher fiscal spending to support businesses and households. Across the border, Eurozone, the outlook is weakening rapidly. Before the conflict escalated, growth expectations for 2026 were around 1.5%. Now, economists estimate Eurozone growth could slow to between 0.6 and 0.8% under more favorable scenarios. The European Central Bank is also warning about stagflation risks, a dangerous mix of weak growth and persistent inflation. Inflation across the bloc could rise by another 0.3 to 0.5 percentage points, taking it close to 2.3% as energy prices surge. France is already showing signs of stress. The French economy recorded zero growth in the first quarter of 2026, with exports weakening and the petrol prices nearing €3 per litre in some areas. Now, Italy's outlook is even weaker. Growth is expected to remain below 0.4%, raising fears that both Italy and Germany could drift towards recession if energy prices stay elevated for long. But not every European economy is slowing at the same pace. Spain is emerging as a relatively bright spot, with growth expected to remain above 2%. Analysts say Spain's larger renewable energy base and lower dependence on imported fossil fuel are helping cushion the impact of the energy shock. Now, for Europe, the Iran war is becoming more than just a geopolitical crisis. It is now turning into a major economic challenge, reviving fears of another inflation wave, slowing industrial output and increasing pressure on governments already dealing with weak growth and high public debt. And with energy markets remaining volatile, economists warn that the worst may not be over yet.